From the IMF meeting, how confident are you that we find a long-term solution to the situation there, or are we going to see a temporary version?
I think it's very important that the United States could overcome its fiscal gridlock. Otherwise, we would have potentially dramatic consequences into the world economy, and of course it would also have negative ramifications to the still nascent recovery in Europe.
Do you think there's significant recognition of the potential damage, despite the deadlock, the gridlock, if you described it, that we're seeing?
In fact, if you look at the situation now in Europe, we have just a few days ago seen a very important budget deal in the Netherlands. And I want to, in fact, congratulate the Eurogroup President, Jeroen Dijsselbloem, and the Dutch government and parts of the opposition for the significant, very significant budget deal. This is an example of a victory of responsibility over brinkmanship, and perhaps it is now the time for the US policymakers to go Dutch and score a victory of responsibility in this very important situation.
It's an interesting lesson to be learnt there. You've also suggested that we could see Spain and Ireland exit their bailout programs without needing a precautionary credit line. Wouldn't it make sense just to have that precautionary credit line in place, at least it only as a calming effect on investors?
It is too early to judge what is the final decision on this. We still have a few weeks of time, but in fact, both Ireland and Spain have seen a very important economic turnaround in their economies, supported by the conditional financial assistance program of the European Union, and in the Irish case also of the IMF. Both countries, Ireland and Spain, have a very good chance of successfully concluding the program shortly.
And how important is the stress tests currently going on in Ireland for that ultimate decision over what happens beyond this programme?
The asset quality review and stress tests and balance sheet assessment exercise is a very important part of the evaluation of what kind of exit is needed, what is the best way to ensure a successful exit from the programs. Of course, the principle of better to be safe than sorry prevails, but at the same time, as I said, both countries have a very good chance of concluding successfully their programs.
And to go back to the point about just having a precautionary credit line there on the off chance it's needed, does that not make sense?
It is one possibility, and that's why the precautionary credit lines have been created. They correspond to the principle of better safe than sorry. But as I said, we still have a few weeks of time, and both countries have seen a very substantial economic turnaround. For instance, Ireland has very strong buffers and in terms of sovereign financing, and both countries have a very good chance of successfully concluding these support programs.
So we're looking at a couple of potential success stories. You also congratulated what the Dutch have managed to do. Do you think we're going to look back in 5 or 10 years' time at the political cost of the austerity programs that we've tried to implement, and worry perhaps that it was too costly, given the push to extremes that we're seeing in Holland, in Greece, in Italy too?
Unfortunately, the high levels of private and public debt have been at the heart of the current crisis, or the recent crisis, financial crisis, and in Europe the banking and debt crisis, which then turned into an economic recession. We have needed consistent consolidation of public finances, and we are working in order to implement a dual strategy. On the one hand, we want to enhance economic sustainable growth and job creation through economic reforms, targeted investment, and at the same time we need to continue with consistent consolidation of public finances. we can do it with a somewhat slower pace than before, mainly because we have an enhanced credibility in fiscal policy in the euro area member states. The ECB has taken decisive action to stabilize financial and bond markets, and we now have a reinforced economic governance which provides a framework for consistent consolidation and structural reforms.
Very quickly, Wall Street Journal this week suggesting that with these programs running off, there's a divorce coming between the IMF and the European Commission. Can I get your thoughts on that?
There have been some media reports which do not reflect the reality, frankly. We are working well together with both the ECB and the IMF, and we are now, as I said previously, we are, for instance, now working in order to successfully conclude the Irish program and ensure a successful exit of Ireland from the program. We work well together with the IMF.
So the relationship's as strong as it's ever been?
A lot of water have run in the river since the time when some comments were made which had been reported belatedly. Now the relationship is very good and effective, and we are working very well together with the IMF.
Perfect. Thank you.
Thank you.
Can you talk about Greece just a minute? Cost Regling said last week there would be a program for Greece, and you did some media reports about what can and can't be done. Can you tell me what your sense is of the situation there?
We will, in the coming weeks, reflect and then decide how to proceed with Greece concerning its financing needs and potential fiscal gap. And then at some point, probably later on next year, once we have seen whether Greece has achieved primary fiscal surplus, we will deal with the issue of debt sustainability.
Have you made any decisions about what steps you could take now or what steps are ruled out?
We will discuss this today, and in the coming weeks we will proceed in an orderly manner and prepare things well, and then we inform the general public about this. Thank you very much.